Ladies and gentlemen, boys and girls, do we have an episode for you today? Welcome back to the Daily Stack Report, where we bring you up-to-date news, daily updates, and we never miss. If you need more proof, it's in the pudding. Go look at our recent videos. We have been spot on with a lot of these technical analysis and things in the silver market. So guys, buckle in. But first, if you want to win a 1996 American Silver Eagle, look at this pristine, beautiful, vintage American Silver Eagle. Hit that subscribe button because at 100 subscribers, I am giving away this 1996 American Silver Eagle. So hit the subscribe, hit the like, and let's get into the meat and bones of this, guys. So right now we are hovering and we are battling and tussling with this $86, $82, $87 mark right here. We have swung up, swung down, up, back up, and back around down, up, down, up, down. We are tight with it right now over since around noon. Let's get more specific with you guys here. Since 5, actually. Sorry about that, ladies and gentlemen, boys and girls. I forgot that I have my 15-minute candles on. I usually have the 4-hour or the 1-hour chart, but right now we have the 15-minute, and we are seeing we blew right past this $82, $85 mark. And as soon as we did, what happened? Bam, explosive move up. And that's just what happens, guys, in the silver market. When we break trend lines, we explode to the upside. And unfortunately, whenever we break them on the downside, we explode to the downside. But we're not going to talk about that today. We are going to talk about silver's comeback in this market. Dun, 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 dun. Look at that. They thought we were out. We were far from it, guys and gals. Far from it. If you guys remember, over here in late January, we hit 121 and got cratered all the way down here to $70, $69 mark. We went down a brief couple hours, but never sustained. And ever since then, it's been a battle of up and downs. And since hitting this bottom for the third time, over here at this $70 mark, we have significantly gone up with this inverted head and shoulders pattern that we have right here. The key is the second shoulder needs to be higher than the first shoulder. So we see the drop, we have a little shoulder action right here, and then we have the head down here, and then we have the next shoulder right here. And as you can tell, we exploded up. We're staying right in tune with this trend line right here, guys. It was the best that I could give you, if you remember. After we broke down from this ascending wedge or descending wedge right here, guys, we broke down and broke out of it. And whenever, again, we break out of something, there's always going to be that explosive move, whether it be to the upside or downside. This time it was to the upside. And so it's positive news that we are staying right here. What I like to see is consolidate a little bit, right, kind of within this range, this $87 range right here. Yes, because that would be a healthy next leg up to the 96 and ultimately to the $100 mark. When can we get there? Let's see. We can predict around, where's the 100? Let's be conservative. We can predict for this to play out around March 5th, so next week. So be patient. Be patient. You still have time. Don't run to your local coin shop tomorrow and buy everything and invest it all. You still have time. And remember, guys, it could fall down. So this is not financial advice. I'm just some guy on the internet giving you my best opinion and my best shot at this crazy silver market that we have. But first, let's go over to silver dollars or American Silver Eagles. If you follow this channel, you know that is my favorite type of silver. And yes, $100 silver is back. I repeat, $100 silver is back. Hold your horses, guys, because the top three, SD Bullion, sponsor me, all right? We're not going to go for a sweepstakes right now. JM Bullion, oh, no, that's just the gotcha price. I love how they have this gotcha price, right, where they put this, but in all reality, you have to order 1,500 or more to save $2 on each one, which, granted, if you're buying 1,500, that's $3,000, so it's about 30 ounces, that you're getting, quote-unquote, for free, but other than that, it's, unless you're a big guy, that's basically what they're putting it out there for. Anywho, All of them are around $103 with spot price hovering around $87.58. We'll go over here to Kitco and we have silver hovering on the bid $86.81. The ask is $87.06 with gold hovering right below 5,200 sitting at $51.70 on the bid and $51.70 on the ask. It's about a $2 spread right there. We have about a 25-cent spread on our side, guys. Sorry, my mental math is not mentally mathing today. But we have about a 25-cent spread right here. Update. $2 spread right here, guys. Okay, so that's going to be that news. But what is driving a lot of this market? And what do I think is going to be driving the market over the next couple days and possibly weeks? Let's hope it's not weeks, but definitely over the next couple days. We have some uncertainties to talk about. So right now, Mexico is under attack. The cartel is going absolutely crazy down there. I'm not down there, so I don't know what the foot on the ground news is. But what I can tell you is what I do hear and what I do see and what I have confirmed. It is that Mexico is the world's largest silver producer, contributing roughly 23 to 25% of global production through operations across across northern states and major mining belts. So what does this mean? It means Mexico's mining sector is facing escalating security challenges right now as we speak. Recent reports highlight that organized crime groups, aka the cartel, are increasingly targeting mining operations, including kidnappings and extortion, in major silver and gold regions like Sinaloa and Chihuahua. Here's the impact. Higher operating costs. Miners must pay for heightened security or protection on the ground, which increases production costs and squeezes margins. Kidnappings and criminal interference can delay shipments, slow production cycles, and make investment decisions more cautious, potentially tightening the silver and gold supply. Potentially, it is tightening it, guys. If we can't get and gals, if we can't get the silver over here to the U.S. and the cartels are taking control of it, aka Mexico's the world's largest producer in silver, guys, what is that telling you? What is that telling you? I mean, I don't have to spell it out for you. It's not good news. We'll put it that way. Here's some investor sentiment is that when the largest producer faces instability, markets pay attention. Traders bid up prices preemptively due to risk and future supply distribution. So that's kind of what we saw right here. Most of the news happens over the weekend. And so this was a lot of that buildup right here, guys. I think this is part of what triggered that short-term growth. But sometimes when it comes to these breakouts, you almost need that catalyst. You need that breakout. You need that trigger. And it's funny because, the COMEX, however you want to say it, shortens the market, whichever bank you want to call out, shorts the market and tries to hold price down. But there's always that universal catalyst that just kind of breaks things out and puts things back into place where they should be. So call it luck. I call it what it's meant to be. But all this comes at a time when Mexico's overall production has been central to satisfying global silver demand, and a shift in output dynamics can ripple through pricing. So why does this matter, guys? Metal markets don't operate in a vacuum. Geopolitical and security issues can influence pricing through two main channels. One, safe haven demand. When political or security risk rises, investors often move into traditional safe havens like gold, and silver usually follows this trend due to its monetary component and investor demand. You can see this pattern play out when traders bid both metals up during the broader risk events. And here's more of the supply tightening. If production, especially from major sources like Mexico, become riskier or decline, markets begin pricing in potential future shortages. Even the anticipation of tighter supply can push prices higher in the short term and medium term. Remember, silver is not just mined for investment metals. It's heavily used in industrial and technological applications as well. So over the past week, silver has shown resilience despite broader risk repricing in global markets. In fact, strong geopolitical tensions and trade policy uncertainty have helped support prices, lifting silver and gold as market participants sought safe havens. Even though economic data in some regions pointed to stronger growth, the uncertainty premium tied to global risk supplies, including Mexico, and trade tensions continue to prop up metals. The gold to silver ratio remains elevated, indicates silver might still have room to outperform if industrial demand picks up or supply concerns worsen. So here's what I'm watching, guys. I'm watching the Mexico mining security news. Any escalation, positive or negative, will likely feed into price action quickly. Trade policy announcement. Shifts in tariffs or trade relationships with major importers like the U.S. or India could impact supply chains and metal flows. Dollar interest rates. A weaker dollar or softer rate expectations typically benefit gold and silver, while strength in the dollar puts pressure on the metals. Sorry guys, I guess I just can't speak at the moment. But pay attention to dealer premiums. They can signal real demand tightening even if spot price isn't moving as much, guys. We don't know what these dealers are going through at the moment. If the premiums start to shoot up through the roof, hey, that might just be a sign that there's a tightening in the market. But if they do shoot up through the roof, again, I highly suggest that you go and you call multiple dealers. I cannot tell you how many times I have called a dealer in location A and they have been $10 to $20 above spot for a premium, and about 10 miles down the road I called location B and they were only $2 to $5 above premium on Silver Eagles. Guys, that is some big news. That's even more than JM or SD Bullion whenever you purchase 1 to 19 or 1500. That's more of a spread on their premiums alone for the Silver Eagles than some of these bigger retailers. So I highly suggest that you go and you call your dealers whenever you are looking to buy silver. Today's silver and gold markets are reflecting more than just macro data. They're pricing real-world risk tied to production and geopolitics. But hey, if you want more daily market breakdowns that connect the dots between spot prices and real events like this, subscribe to the Daily Stack Report. And let me know, do you guys think that this Mexico conflict is going to make silver skyrocket? Are we going to have higher premiums? Guys, let me know in the comments. As always, I appreciate all the support. Like, subscribe, stack smart, stay safe, and of course, I'll see you tomorrow.